Welcome to Dr. Fred Markets. This is not financial advice. Most people will never understand how crypto, AI, and global finance are reshaping the world. The rules are changing, and the ones who adapt early come out ahead. You're here. You're paying attention. That already makes a difference. Let's go.
Your retirement plan is more likely to leak than your roof. Signal 1. Water is already the new oil, but investors are still treating it like tap background noise. Global water demand runs about 4,000 cubic kilometers a year, and the UN projects a 40% shortfall by 2030. Yet the entire global water utility and infrastructure market barely pokes above $1 trillion in market cap. For context, that's less than the combined value of 2 hot AI chip names and your favorite fruit logo, to keep the lawyers calm. Signal 2. Meanwhile, you're hypnotized by the Venus-Jupiter conjunction photos while ignoring the actual space stock printing money today, Rocket Lab. Ticker RKLB is up around 5% on the day, trading near $110, surfing a quiet arms race to put sensors, imaging, and soon climate monitoring payloads into orbit. Translation: they're selling picks and shovels to governments and companies who suddenly care a lot about who controls the sky. Signal 3. Wars in Lebanon and elsewhere push defense budgets higher, which quietly pushes satellite budgets higher, which silently turbocharges one thing: remote data about where the planet's water and crops actually are. Add the upcoming SpaceX IPO hype, CNBC literally trimming positions just to have dry powder for expected volatility, and you get a sky full of capital chasing space. But most retail investors still think water investing means buying a bottled water stock and praying. So here's the connection nobody spells out. The real long game isn't picking water brands. It's owning the infrastructure and the data stack that decides who gets water, at what price, and how reliably. Satellites like Rocket Lab's payloads are turning rivers, aquifers, and crop fields into real-time financial data feeds. That data then drives water rights pricing, insurance payouts, crop futures, even which municipalities get pressured to upgrade their pipes first. You're used to tracking Bitcoin at $62,694, up 2%, and Ethereum drifting 1.4% higher, and thinking, number go up. Cute, the same speculative instinct is quietly moving into water and space, but with a nasty twist. With crypto, the underlying asset is digital faith. With water, the underlying asset is whether your city can flush toilets in a heat wave. One is vibes, the other is plumbing plus physics. Here's the one thing you didn't know. Satellite-based evapotranspiration and soil moisture data already decide how much water big farms are allowed to use, and in several basins that data is now directly plugged into financing terms. Miss your efficiency metrics, your loan gets worse. Hit them, your interest cost drops. That turns water usage into a tradable risk profile. Suddenly, the line between space stock and water infrastructure play disappears. You're not just betting on rockets, you're betting on who controls the spreadsheet that says yes, you irrigate, or no, you go dry. Mechanism time, no fluff.
Does what you just heard make you want to learn more, to dig deeper, to ask better questions? That curiosity is exactly what separates people who understand finance from those who don't. Most people stop at the surface. You're going further. Let's continue.
Step 1. Satellites scan fields and reservoirs, measuring water stress and crop health. Step 2. Software converts those images into risk scores, drought probability, yield expectations, flood risk. Step 3. Insurers, banks, and governments price policies, loans, and water rights off those scores. The investor side? That whole stack monetizes as recurring revenue, data subscriptions, analytics, infrastructure upgrades. This isn't a moonshot lottery ticket. It's a utilities business wearing a NASA costume. Why do you care while the S&P 500 grinds up 0.36%, NVIDIA quietly adds 0.44% on the day? Because your index fund barely touches the choke points: regulated water utilities, boring pipe and pump makers, satellite operators, and niche data analytics shops. The cash flow is there, but it's split across utilities, industrials, aerospace, and software. So you never see the system, only the tickers. Here's the brutal verdict. In the next decade, whoever owns the pipe plus the pixel owns the drought. Not bottle labels, not hashtags, pipe plus pixel. So what do you actually do with this, without pretending this is financial advice? First action, map your exposure. Open your portfolio and count how much is purely vibes, story stocks, meme names, whatever, and how much touches real-world choke points. Water, power, logistics, satellites, infrastructure. You don't fix what you don't measure. Second action, study the water stack, not water stocks. Look at 3 layers. 1, utilities and treatment. Who sells the actual flow? 2, infrastructure, pumps, meters, leak detection, pipe replacement. 3, data from above, remote sensing, satellite operators like RKLB, and the analytics platforms built on top. You want at least one way to benefit from each layer, even if it's through broad ETFs, because the pricing power will ping-pong between them as regulation shifts. Third action, watch for the moment governments move from subsidy mode to penalty mode on water waste. When laws start charging cities and corporates real money for losing water through leaks, the players tied into space-based monitoring and smart infrastructure become cash machines. That's your inflection point. Same way carbon credits turn from a joke into a line item. This is not financial advice, but here is the truth. The best long-term trade isn't chasing the next sexy rocket or the next altcoin. It's front-running the quiet merger of Orbit and Faucet, where satellites tell pipes what to do and investors skim the subscription fees off every drop that doesn't leak into the dirt. If you learned one real thing today, that space and water now share the same profit engine, hit subscribe because tomorrow we're tearing apart another safe narrative your advisor never questions. This is not financial advice. If you enjoyed this video, please subscribe to the channel and check the links in the first comment below.
That's it for today on Dr. Fred Markets. I hope this gave you clarity and a new perspective. Remember, this is not financial advice. Always do your own research. If you found this useful, subscribe. It's free and it helps the channel grow. Find me on the blog at drfredmarkets.com and join the newsletter via the link in bio. I'm Dr. Fred Markets. See you in the next one.